Perfect. So Kingdom Financial Solutions is going to be providing us our first session of the morning. And it will be given to us by Waverly or Wave Robinson Jr. Wave is a passionate husband, father, and friend, and CEO of this company. He and his wife, Octavia, had 4 young men and 1 young lady, who are preparing to be Kingdom contributors to society. Wave is originally from Miami and graduated from Miami Norland Senior High School as a 2-year letterman in football and 3-year letterman in track and field. Wade furthered his education at Bethune-Cookman, earning a degree in business administration and receiving an MBA from the University of Phoenix. After following a successful career with Charles Schwab as a senior investment professional, Wade actually went on to find Kingdom Financial Solutions, a financial literacy organization, and he started that in August of 2005. Welcome, Mr. Robinson.
How's everybody doing today? Don't be so excited. We're gonna make finance fun. That's one of the reasons we're here to start the organization, answer questions. All of the technical stuff we're gonna get to, I promise y'all. All right, there's gonna be a time where we pause and actually go into QuickBooks a little bit. I'll play a video and we'll do some Q&A. Before I get started, introduce myself. I'm gonna show you pictures of my family and everything, so y'all don't know me better than I know y'all. By the end of the day, that's part of it. What businesses, if you guys don't mind, just to hear the flavor of the room, are represented here today? You can just pop it up and I'll recognize you. Anybody want to start? Publishing. Pottery. Healthcare.
Digital arts, graphics, design.
Digital art.
Yeah,
graphics,
digital art, yeah, art and design.
All right. Counseling.
Retail.
Retail.
Dessert. Beauty supply store.
You all right.
Dessert.
I heard that one.
Martial arts.
Martial arts.
Custom signage.
Custom science. Coffee shop.
Fresh juice. Cold fresh juice.
Cold pressed juice. All right. Love it.
Gelato and sorbet.
All right. I had shave ice the other day. They made me pronounce it properly. Don't you get it? It doesn't have ice cream on the bottom. They talked about me. I was like, I got snow cones in my hand. Ice is, and that's it. It ain't shaved. All right. Hey, so I want to kick us off really quick with a video just to bring us in. Hopefully this will allow you to relax, feel at home. We're going to get into some really technical stuff. And I'm going to do my best to make it ABC 1, 2, 3, I promise. And if I get too far away from you, there are no bad questions. Only smart, great questions that somebody else wanted to ask and they didn't have the courage. So let's pause during those times before we move forward. All right. That way we are comprehensive throughout the entire day. All right. So let's.
The world needs to stop being boring. Yeah. Boring is easy. Everybody can be boring, but you're good at that. Life is not a game, people. Life is a serial leader. And if life is a game, are we on the same team? I mean, really, right? You're your team, you're my team. Just nice people. Got air coming through your nose. Got heartbeat. That means it's time to do something. Oh, 2 roads diverged in the woods, and I took the road less traveled. It hurt, man! Yeah, box, board, and glass, and road. Not cool, Robert Frost. I won't be the one that makes it awesome. Like that dude Journey said, don't stop believing. can try those. You're a better friend that keep going. Going, and keep going. Will Michael Jordan have quit? Well, he didn't quit. No, he retired. Yeah, he retired. But before that, high school. Will he quit when he didn't make the team? He will never make Space Jam. What will be your Space Jam? What will you create with make the world awesome? Nothing if you keep sitting there. That's what I'm talking to you today. This is your time. This is my time. It's our time. We can make every day better for each other. If we're all on the same team, let's start acting like it. We got work to do. Proud now? Oh, yes, guys. You are made to be awesome. Let's get out there. I don't know everything. I'm just a kid. I do know this. Everybody's doing the gift of the world and reason to play. Get to it. Create something that will make the world awesome.
That video never gets old for me. It just sings to me. So a little bit about me. Grew up in Miami, Florida. Actually, David's my childhood friend. He knew me in the life before Wade, before they called me Wade. We got a couple nicknames too. We actually went to college together at Bethune-Cookman University, proud HBCU grad, y'all. I was a senior wealth advisor at Charles Schwab back in the early 2000s. They hired a bunch of us from HBCUs, 5 from my college and then 5 from Florida A&M, and they put us in this cohort together, right? And so man, it was the best thing ever. But I was an entrepreneur. So after 5 years, I was like, I'm gonna go start my own. Right? I learned everything I could. I went to every class. I got every certification I could, and it's like, I'm gonna go do this for everyday people who really need the service. Where I was, whenever they put that number, and you say, well, that's a number attached to that. So I couldn't help my mom open an account or my dad retire and those types of things. I was set off, and so I was like, man, I'm gonna start a firm where I can actually give people the same type of services. So that's where Kingdom Financial Solutions was born. And it expanded from helping individuals to now helping organizations do 3 things specifically to keep us targeted. And that's to grow, to maximize, and then to create freedom. So hopefully you guys are here with that in mind. Does that make sense? I want to grow, I want to maximize what I'm doing. I want to be the best that I can be, right? And then I want to create freedom someday. Someday I want to be able to be a Charles Schwab, if that makes sense, and have that thing. And hopefully you guys desire the same. And I call that one word, all right? Attachment. And if you want to put in parentheses, legacy. So when I talk finance, I'm not talking numbers, even though we're going to get into some definitions. But what you're investing in, you want it to live on. You want it to have value. You want significance beyond success. So that's what I help bring. I just put numbers to it, which is really cool. This is my family, y'all. These 3 are all grown up and going to college. My daughter's taller than everybody now, which is cool. And then my wife and I have been married 20 years this year. So excited about that. Actually, this half of the picture is the only one in the house. So we went from big minivan like big to Camry. So that's kind of cool. That's gonna be different too. So my daughter will be going to college in 2 years, and then it'll just be the little guy, little Bam Bam, I call him. So that's my family. And part 1, I'm gonna get the tough stuff out of the way. I just want to talk to you specifically about what most people shy away from, and that's accounting. I want to talk to you about why it's important, and I want to break down some basic definitions. And I'll make some points and some jabs to make you feel something. All right, I want to make sure you feel something as you walk away. In addition to that, I want to make sure you have context for your business. If you remind me, something I didn't do yesterday, Jermaine, my cousin's in the back, was give you your break-even number. Okay, that's gonna be cool. Because the break-even number is the pressure point. I'm gonna talk about pressure points as well. And if you don't know that number, which is scary, in some of my businesses, I don't want to know that number. I'm doing good enough. You know what I'm saying? But once you know the number, it forces you to grow, maximize, and then what am I gonna do with it? So that's a painful thing. I just throw them out there sometimes, sitting with somebody that's, so you need a minimum of this to do that. And then I've been meeting with people and they say, that's not feeling good, or that's not normal, but it's the very thing that prompted me to move forward. All right, so our strength as a nation. This is one of my favorite quotes, and I think it's the basis for why we are here together in the city of Tacoma. Why would I come from Florida across? Because our missions align. Our missions align. What I understand is that our strength as a nation depends upon the financial independence of each of us as individuals. This is an excerpt from The Richest Man in Babylon. George Clason wrote this book in the early 1900s. Still, it's a thin, skinny book. You can probably get it online in a PDF if you Google it. You can get it on audio. Great story read. And we'll use a few quotes from him. But what he is explaining is that the reason that the first great city, Babylon, was successful was because of the individual financial independence of each person. And so that's true for any community. That's true for any family. I'm raising my children to be self-sustaining kingdom contributors who want to go beyond success and things to significance, purpose. All right. And so that requires financial management. Does that make sense? I can't spend more than I earn, regardless of my intentions, regardless of what I buy. Excuse me. I can't spend more than I earn. I got to find a way to balance that out. And that's some disciplines we'll talk about. But that's really that's the concept. And that's what I want to teach. You know, you want to teach your family members, because as you become successful, you become the person they call, right? And you need to tell them this, and maybe buy a book. All right, $10 may save your life. All right, that's all it costs. Oh, hey, these days you can download the PDF and send it to them in a text, right? So accounting in and of itself is basically looking backwards. The purpose of accounting is to know what already happened and report it for legal purposes. For legal purpose, this is your actual record of what I'm doing in business. My target audience when it comes to accounting are these people: the IRS, the Department of Revenue, the Employment Security Department, and lenders. I need to create a track record so I can be worthy when I show up, and we'll talk about that. The purpose, we're legally required, and there are penalties, fines, and eventually, if we do not participate in the financial accounting process for our businesses, we'll get closed down. Okay, in some cases, nonprofits get turned into for-profits. Okay, so we want to make sure that's not to scare you. It's just to say, why? Why is this important? Why would I go home and put a budget together, make a plan, keep my receipts, track my mileage? I'm just telling you, these are the basic things. Those are all accounting practices, okay? And then what will you need? A bookkeeper, which is you to start, right? But today you get a 12-month QuickBooks subscription. So you can connect a program to your bank account, and all your receipts and all of your reports will be in one place. All right, so that's what it takes to do proper accounting. Or you can go old school. Old gangster movies, they got a little book, a little ledger, right? You can go line by line. They sell those at Office Depot. You can get the two line, 3 line, or 4 line, depending on how many columns you want. Income, expenses, balance. I always go with the 3 line. That's telling you I did what I'm telling you to do. Does that make sense? I will say this: when I wrote down my income and expenses, when I paid attention, I spent less and I made more. It's fact. When I didn't look, I was being irresponsible. I was swiping my business card at McDonald's, and I was trying to figure things out at the end of the year. Okay, all right. That's just so we can understand. Just to review, why should you care? Legally required for all business owners, required to get loans, avoiding penalties, keeping your business, no exceptions. 2 types of accounting, all right? Well, this is one step in, all right? One step in, y'all with me still, all right? Cash and accrual. Okay, for the cash people, you don't borrow or you don't accept credit. Any of those people in the room, cash. I ain't extending credit, I ain't accepting credit. You pay for this shirt or you don't walk away with it. Any of those people in the room, let me see those hands loud and strong. All right, so you stay on the left side, real easy. It's easy to follow, but it's difficult to forecast. We're gonna get there too. Here's how you forecast though, from a cash-based person. If I keep records, I can look back. And I can set expectations. When I'm doing bookkeeping for people and I'm beginning to forecast a cash-based business, I'll look back at the seasons first. What did you do? Winter, spring, summer, fall. Then I'll say, what happened in June? Why was June so special? What was the increase? We want to duplicate that. And so I begin to build a model out. All right, future budgets. Future budgets. How do I set a future budget? If I made $100,000 last year, I'm gonna make a $90,000 budget next year. And I'm not gonna spend anything over 90. Does that make sense? Y'all with me on that? I'm gonna pause for questions. Y'all not. Everybody thinking right now, right? I want to always make my budget at 90% of whatever last year's revenue was. That way I don't over budget myself and I don't over project because it's gonna rain, right? I'm gonna lose a client, I'm gonna gain a client. Something's gonna happen that I don't expect. And that way I'm always winning, I'm always winning. And if I made $200,000 and I only plan for 90, I don't spend 200,000. I spend 90. I stack with 110, and then I set my next budget for 180. Now it's 10%, 90% of the 200, but I get to live. And once you do it once, man, there's this fruitfulness and this peace that comes around you because you got a plan. So on the cash people, I want to make sure I didn't do that yesterday. I want to stop so I can tell you how to forecast. And the accrual basis, that's basically technical accounting. It's required for forecasting. But those are for the people that are collecting invoices and maybe sending out invoices. So you have to account for money that you're owed and money that you owe. And so we need to, in addition to the cash, put the account receivables and the account payables all in there together. You can separate them by 2 simple line items. That's income and expense. And so you got your cash line and you got your receivable line on the income side. On the expense side, I got expenses and I got my payables. Anybody want to ask questions there? Good?
If you have 2 though, like for example, if you do your face-to-face sales, which is you don't leave the store with that shirt or that cup of gelato, but then you also have wholesale. So which you do start billing people and you have some sort of catering, where people say, okay, well, I'll put a deposit down of $300, but then I bill you for the $1,200 the rest of the month. So you can have both.
Yeah, this includes cash. So this is.
Oh, okay, so then.
That's right. That's when I'm beginning the invoice and I have to say that. I'm beyond cash-based.
So I think we're technically accrual, but we operate on cash basis. Is there anything wrong with that if you're smaller than?
No. Small. It'll get complicated with employees and multiple salespeople. That's when you really gotta have to. But if it's just you, you can almost keep that part in your head if it's small. You know who owe you at a certain point. When you start forgetting, you got a good problem. Think about that. But you need help so that you can be in the maximization point, because you're gonna grow to the point where you need help. Now I gotta step over, I gotta maximize and get somebody to see what I can't see. Does that make sense? And that's how you add Good. All right. Taxes versus bookkeeping. All right. Taxes are recorded by a different set of laws than what we would say accounting is. And so accounting would be necessarily book, but taxes are the internal revenue code. So the IRS has a code on how we are to report taxes. Taxes. In a business, you only pay taxes on profit. All right. So that means if I spend $10 on 10 apples and I sell them each for $2, right? That means I'm gonna make 20 total, but it cost me $10 to make the money. So they only tax me on what I made extra. Does that make sense, everybody?
Yeah.
So I only pay taxes on $10. How do you reduce the tax base? Bingo. I had to drive to get the apples. I had to drive over there to get those apples. Matter of fact, they delivered them and I drove to pick them up. Right. Most people do not consider those things as expensive. And there's a list. It's pretty comprehensive. If you're driving and using your car, there's a mileage deduction. There are tons of things. And so now we need to begin to separate our personal finances from our business finances so we can get a really good, clear picture. And that's how we pay taxes or not overpay taxes. They're not asking you to overpay. If you're a business owner and you're in this room, the tax system is created for you. It's for the business owner. It is against the individual employee. Let me just say, they don't, like I joke when I do like just financial training for individuals, because they don't trust y'all as employees. They take their taxes first. Business owners, you get to upgrade. There's a relationship here. We're gonna win together when you start to think about taxes. And so we need to learn the laws and be able to do it. So all I'm gonna say is not just the cost of the apple, but the entire process of getting to the apple and then getting it back home and then putting that money in your bank account counts. All of that's mileage. All right, y'all with me on that. Any questions? Can you see yourself in those examples? Okay, good. That's what I want to make sure we're connected about. Bookkeeping, we follow what's called accrual accounting rules, general accepting accounting principles when it comes to bookkeeping. And we'll get into the three main financial statements: the income statement, the cash flow statement, and then the balance sheet. Those are the three main ones. Somebody shook their head. I ain't gonna look back that way, right? But all that's in QuickBooks. So you ain't gotta have, you don't have to have mine, you know, you hit a button that says, what's my cash flow look like? And QuickBooks will pull it up for you.
It is giving the tech. It's one of those things where you're not sure, you know, because I'm the one that Miss Deidre recognizes because I'm trying to get one of her loans. And it's just one of those three things that is driving me crazy. And I keep putting off, she keeps sitting in my inbox, you have a loan to apply, you have a loan to apply for it. I'm like, I don't know how to, this stuff, I don't know how to do it. And I do it,
That's why we did it.
But I don't know how to do it.
So the exciting part about the DSAP program, and what I'm glad you brought us in, by the way, thank you. And what David put together is it's comprehensive. Our vision is clear. Deion Sanders is coach of football, right? I watched this clip the other day. Repeat the converse. Just a point. All right, just a point. Deion said, I need motivation. Motivation? Like, I didn't have. Well, and so when David and I were growing up, we wish we had mentors. We were entrepreneurs at 17, 18 years old because we knew how we were wired then, believe it or not. We just didn't, we had to depend on legal advisors. I was joking with them that would come along and say, here's how you do it, young fella. And they were doing it the wrong way, but they wanted us to do it the right way. Does that make sense? You guys know what that looks like out there, right? Already, right? So we didn't understand what we want you to understand. And so the workshops as we follow up will be built around unclogging the gaps. asking specific questions. And then for me, you're gonna get a free 1 hour workshop. So as you're going through even today, make sure you're making notes on the things I wanna cover during my time that I have, because you get a whole hour, all right? So any more questions in relation to where we are right now? I'm doing good on time, no worries.
We get an hour individually or as a group?
Individual.
Okay.
Yeah. So we're doing 4 workshops. She already gave you the announcement for the 9 and 12 Tuesday and Thursdays. And then via Zoom, because I'll be back on the other side till I come back, but that's crazy. I'm going like literally the farthest point down. Right? Beautiful city, love it. But we'll do those via Zoom. You'll be able to set them up via Calendly. Based on the calendar, won't be a complicated process. I'll be there. I'm gonna be in the Zoom room. So I'm hoping you are when you schedule your appointment. That's an important thing. The most important thing we don't do. We tons of opportunities. We work hard. We show up. We don't follow up. We schedule appointments. And because we can, because the boss don't make us, we say, whatever that might be for the day. But at work, they get it out. They maximize us, don't they? They know how much to pay you, where to put you, and how many breaks to give you to get what their nugget. They know what that break even is too. And so we want to treat ourselves the same way. So if you schedule the appointment with me, I will be there. Please follow up. That was a little tip there. Okay, and let's get into financial management. I mentioned some of those income of these financial statements. Looking forward, financial management is the forecast. It's what is gonna happen and make changes to optimize for the future. The example I would give is if you've ever watched a sports game, the coach has to adjust as the game is going because different things are happening, right? The target audience, guess who? For financial management, the primary person is you. You want to know what's happening in your business. You want to know what your top products are. You want to know what your target market is. I'm talking finance, but Square is going to help you with that today. And then the Google Analytics, they're going to ask us the same questions. Who are we targeting? And ultimately, when it comes to finance, it's you. Okay? Investors, managers, lenders. Again, the purpose and what you'll need. At the minimum, an Excel spreadsheet, I threw that in, QuickBooks, and eventually multiple sites, multiple locations, multiple projects. You will need a CFO, a chief financial officer. That's somebody to run your finances for you. So you can keep doing whatever it is you do, unless you're the financial person for your business. When it comes to financial management, businesses live and die by their margin. We're going to talk about pricing today. We're going to talk about making sure that I'm hitting the right profit margin so that I can keep growing. Because if I bought $10 worth in apples, right, and I sold them for $20, I spent the $10, but that's what I made, the profit. I just went back and bought $10 more worth of apples. I'm not growing. I'm basically doing the same thing every day. I have to take a piece of the profit and put it back in my business every time in order to grow. And I need to know what that number is. All right. Revenues grow, but expenses can grow faster. Human nature. Check yourself. Human nature. Human nature. They have these apps for the subscription that we signed up for 6 months ago to watch that show and forgot about, but they done hit us 3 times. You know what I'm talking about? Human nature. We're not perfect. We won't catch everything. Allow yourself grace to know it, but check yourself. Check yourself to make sure. You can double profit without adding a single customer. Better marketing, better positioning, better target, better pricing. Financial management is also required. When I say maximize, I'm thinking franchise for your business. Just know that. Now, y'all might never want to do that again. I may not want to lose my authenticity. But I'm thinking for the day that you don't have to show up in order for it to go. That's what I would say. You could have multiple things happening. You could be on vacation, and the business has a good enough system and a process that it will happen without you. And you can keep going if you want, but that'll be optional. It'll be for the love of the business. It'll be for a ton of different reasons. So when we talk about other locations, even if you don't want to franchise, think of yourself as a franchise. And we'll talk a little bit more about that later today too. How to use finance when it comes to forecasting. You will get this PowerPoint. Let me just remind you, because now I know you're starting to feel overwhelmed. I gotta give you the definitions, otherwise it's not good finance, y'all just tell me. So please forgive me. I got a couple videos and we got a couple breaks, I promise. But as we go into these, I want you to make sure these are the key things that I need to know and understand. I'm gonna try to give you a little pressure point so you remember, okay? But when it comes to forecasting, I have to budget for the future and plan for growth. Here's one of those times. Who can tell me back the strategy I gave you for forecasting about 5 minutes ago?
You want to know the cash method?
10%. Say it again?
10%.
10%.
You look at the seasons.
Season.
and what not to.
Boom, boom, boom. All right. I ain't losing. All right. Anybody have questions about forecasting? Maybe I should repeat it if you didn't know. If not, I'll keep going. Good? Okay.
And when you're working with forecasting, like I work on contracts, I get a certain number of contracts every year. Should forecasting only be based on the contracts I currently have, or should I project out that I expect to get X number of contracts next year for about the same amount or more?
90% of what you currently have, if I was planning for next year. All right. If I had words that I could keep out here, but that's what I've been saying. 90% of this year's revenue is next year's budget. That creates all kinds of questions. Because what was last year's revenue? How do I know? What's my fiscal year? Great question. But I'm not gonna answer those. I don't know. Yeah.
So you're saying you utilize 90%, is that 90% also considering the marketing for additional growth at 90% as well, or?
Hopefully, but not always. If we went through the pandemic, you guys, so we went through 2020 and we were planning for 2021. I'm not thinking growth, I'm thinking survival, I'm thinking sustaining. I'm gonna look back at 2020 like it was real and it's gonna happen again. Does that make sense? And so if my revenue went down by 50%, I would not project that it's gonna come back. I would live in the 90% or whatever that is, make decisions about how to survive in that. And then if it did better, great, I'll feel better throughout the year. That's how I would budget if I was looking at it.
I like to call myself a COVID baby business. Because I opened 11 months late due to COVID. My grand opening was supposed to be March 20th. So I feel like everything is surviving. Like I have no idea how to project anything because the projection is just staying open at this point. So I guess like I try to forecast, but it's still just everything's just.
So if I wanted to buy your business and I was willing to give you, this is for everybody, because everybody just had the courage, by the way. Half the room feel like that. I'm just telling you. There are times I go in survival mode, right? We've been there, seasons, all types of things. But if I wanted to buy your business, and I do, I want to buy it, right? And I'm willing to give you what you want or need. You have to place a value on that. For me, for you. So that's the heart part of it. So I can dig past survival. That's how you'll transition out of that. The heart part of it, go from here to here. Like, it's my thing. What if God, gave me what I wanted? What is it? So hope you felt that too.
So, and maybe you just did
lenders looking for you to forecast growth about? Maybe that's what you're just saying.
They are, but they're gonna look back to make sure that your growth it's always gonna be conservative growth. So I'm gonna look back 3 years. Oh, you made 20,000, 30, 50. I'm still only planning on 90% of the budget. Does that make sense? So I'm still showing growth, but my budget, what I'm gonna live on, what I can anticipate, I made $50,000 last year. What's 90% of that? 45? I get it small numbers, y'all see that, right? So I'm gonna live on 45, I'm gonna plan to, because I may have some of those things. So I'm showing growth over time, but my forecasting for my personal budget is that. And they're not gonna give you a loan, by the way, based on your budget. It's a lot of pretty budgets. They're gonna give you a loan based on that track record. That's what they're gonna look at.
So when you say the 90% of your revenue, is that your sales that you made minus everything else?
Mm.
Or is that all the sales that you made, everything that came in?
Mhm.
Okay.
And then I'm gonna adjust my expenses accordingly. And that's how you put the entire picture together. Because if I do that, there should be growth year over year, by the way. So you're not sacrificing. You're thinking about, I made 100,000 and the year before I made 60. So you're gonna make a $90,000 budget. Did that make sense? So did that? Oh, okay. So if I'm living on 90 and I used to live on 60, I'm still in growth mode. Does that make sense? And so when I plan it, I'm gonna adjust my expenses accordingly. Most of you on this plan should get a raise. It'd just be a conservative rate.
You talked about lenders looking at your track record before they decide. Are they looking at your track record of managing debt, of growth, of income, track record of what?
All that.
All of it.
And it can all be contained in all that, sorry. But they're gonna ask you for 3 things basically. Income statement, which shows your income and expenses, period. Cash flow statement, which shows how you manage cash. Does it burn through your pocket?
Yes.
Because what lenders want to know, I used to lend, Fifth Third Bank. So what lenders want to know is the willingness and ability to pay. That's all your credit report shows. The willingness to pay based on your history, and then they're gonna look at your numbers to see if you have the ability to match the loan. So that's what they're looking for, right? And I want to begin to build that into my track record. Higher profits. Understanding your margins at the product level enables you to be more profitable. So what do we know McDonald's for? Hamburgers and fries. Well, what do you think their most profitable item is, or one of them? Coffee's good. Lots of good ones.
Just appetite.
Soft drinks most times. You pay $2.99, cost about 10 cents once they put it in that syrup pump. But they mix it together with the seltzer water and the cup. So, what's your soft drink?
Sorbet. That's the one that I make. That's the one with the highest ROI.
Answer it. There you go.
Lowest to make.
Find your soft drink so that you can increase profits by position. When you walk through the gas station, those are not the best, cheapest sale items. Those are the highest profitable items on that line when you walk by. $2.99 for the same thing that's hot. There's a 2 liter in the back of the store with dust on it. But it's cold. Dave Ramsey like painted that picture, right? They market to us, not for our benefit, but theirs. You have to be that kind of business owner. You want to make sure that you put those things out there, all right? Capital, when applying for loans or securing investors, it will help make things happen in your business if you have money. Okay, so that's where the 90 deal comes in. And this is where I would give you probably the best rule for the day. It's richest man in Babylon. It's all throughout the book. That's why I want to leave you with something that you can take. You gotta write this down. Because this is a real concept. It's gonna be the hardest thing you ever did, but you will not have financial success until you do. All right, a tenth of all I earn is mine keep. 80 to 90% of the room does not keep anything for themselves. That's another way. They say that in the book too. Pay yourself first. But a tenth of all I earn is mine to keep. Now that tenth is intended to make more money. It is not for you to spend it, and this becomes your capital. I just sock it away. If it's 50 cents, I still follow the discipline because it's a discipline. It's a habit. It's a behavior. A tenth of all I earn is mine to keep. It'll become $100. Then it'll be 1,000. And then you have to ask somebody, what do I do with the $1,000 that's mine? That's mine. This is for me. How do I want to grow it? What industry do I want it to go into? What do I know best? And the book even give you some rules on how to invest that. Now here's the thing, that 1,000 gonna have babies too. It'll become 10. It'll become 100. And you need to be ready for that day, because the small incremental savings over time that you forgot about are really what's going to accumulate. A tenth of all, especially as a business owner, it's mine to keep. It's the hardest discipline. The book even goes into the point of saying, why would you pay, this is Babylon, the cloth maker, the food maker, the jewel maker, the hair maker, everybody else but yourself. Everybody else has a name for what we make but us. All right, so a tenth of all I earn is mine to keep. That's gonna sting a little bit. Because it's hard to do. Courage on the fire right here. Go ahead.
Is that off of like each sale, or are you talking about like? Just put it.
It depends on your discipline level, let me say that. If you can wait to the end of the year and be disciplined, yes, but it's 10%. I do it on every sale as a discipline. I wanna watch this is the only money I have, believe it or not. Everything else I have, somebody else owns. Think about that. This is the money that I'm gonna go into my Scrooge McDuck, y'all know,
Yes.
money bank, right? That ain't his businesses. This is the only time, right? So, yes, I do it on a regular basis. Definitely money. Definitely money. Tenth of all I earn is mine to keep. And I do it in both spaces. I don't know if you're willing to go there, but on the business side, I put it in the business savings because I want my business to grow up one day, right? And then when I pay myself, I put some aside because I want to grow up one day. I don't want to always be broke. I want to be able to take a vacation.
So do you see this as your savings plan, or the savings plan is something different?
Savings plan. Yep. Then it'll become something else. I got a video for that.
Okay.
I'm sorry. Here first.
Okay, go ahead.
Okay, so imagining if I convince myself to do it on both sides, thinking, okay, on the personal side, put it, invest it in the stock market, or 401k, whatever. Is there a place you can put it on the business side where it won't get taxed immediately? Where's that place?
Keep it in a business account.
Just don't use it.
Once you take it out of the business, it becomes personal tax, right? So keep it in the business account. It's still all in your account. It's just in a separate space. It's over there. This will show up on your balance sheet though, because your balance sheet is going to show all of your assets and all of your liabilities, and then it's going to give you a balance at the end. So it's going to show your cash balance. It'll show all the property you own if you own property and buildings. if you own what's the machine for the coffee shops that's so expensive? Espresso machine, that's an asset on your balance sheet, you need to know it, all right? If you borrow to buy it, it's a liability on your balance sheet at the same time, though. At the same time, so it's important to know. Go ahead.
So one of the questions is, I think that you can help me solve this today, is when you do your income statement for the banker that you're going to be asking your loan for, you don't include your personal stuff, right? Is it your personal stuff too? Like,
Until your name and your business can speak for itself, because it's still your personal, they're gonna attach you to your business.
right, because when I did my taxes, I wanted to try to do an S corp, but you have to like jump through hoops to an S corp. You gotta fill out paperwork ahead of time at appropriate time. So my tax person was like, you can't do an S corp, you have to do it through you. You have to do it through a sole proprietor because that's how you operated last year. So that actually is me, and the business money comes directly through me, which I didn't really like that, but that's the way it is. So when I do my income statement, I do it like my student loans go on there. What? No? Yes.
First of all, we all start out the same way, so don't
Right.
feel that. We're also priorities. That's kind of the first step in the business, unless you're a perfect planner, then you start first. But most of us entrepreneurials, we was already over and kind of figured out what we need to do, and that's it. So, but make a clear line of your household expenses. I give you the top 5: food, clothing, shelter, communication, transportation. Then your business stuff is over there. That's student loans and everything there. Now, you may pay yourself through the business. So I'm gonna write myself a check every month. I'm gonna treat myself like an employee. And then I'll pay my student loan on the personal side. That's how we separate. And the reason for that, going back to the beginning, is because I want to be able to forecast. I don't want my Netflix to be mixed in with what's a business monthly subscription, my QuickBooks. Right? That shouldn't all be together, because I want to print a statement, and QuickBooks is gonna help you separate that. And really, that comes down to 2 separate bank accounts and making one transfer a month or weekly, depending on the frequency. Because once you move the money, then you can start doing that stuff. But what happens is we don't make that initial step, and we do what's called, it's a bad word, I'm gonna give you a bad word, accounting firm, co-mingling funds. Co-mingling funds is a no-no in our world. Anybody else? Good stuff. All right, cost of goods sold. That's what COGS, you'll always hear that, because that's the cost of doing business, no matter what it is. Some of you have these awesome no overhead businesses. It's like, hey, I don't even pay for, I work from home. It's all electronic. I provide services. So I don't have a cost to my business per se, even though they're expenses. I don't have a cost to do business. Some of you do retail, right? So I have to buy clothing. I have to buy coffee in order to make money. And that's the cost of goods sold. So understanding your unit level cost is important. I put questions here for you to be able. This is a PowerPoint you're going to take home. So when I come back through here, and I'm going to ask myself these questions: how many cents of ketchup goes on each burger? McDonald's can answer that question. You may not, but McDonald's is that detailed. Let me tell you, that's how they know how many employees to hire, how many managers they need, and blah, blah, blah. They even know like the proximity between McDonald's, because it'll start to affect one or another's profits. They know those answers, and so we want to begin to look at that. Now, here's the thing. You may not have to go to that level of detail, right? But what does it cost for you to do business? What does the t-shirt cost in its final state before you go sell? Okay? Labor, understanding your labor costs. How many dollars of labor goes into each burger? That's pretty simple, right? I'm paying so-and-so $15 an hour. How many burgers can they make in an I gave you that one.
Are you still factoring that in if there's no employees? That's just yourself.
Yes, I am. Because I'm the labor that I gotta replace one day. I wanna know how much it costs to replace me. And then I wanna feel devalued when I'm in there making burgers and I feel like I shouldn't be making burgers no more. You need to know the call around. Making $2 an hour right now, making these burgers. And so, and then we wanna make sure that we know that cost, very important.
How do you assign a dollar value to that?
Time and whatever the cost is that we would, do so. So, do it in reverse in that case. So I'm gonna sell this for $20, right? Took me an hour to make. Man. Pay somebody $10 an hour, make two of them, and you make $40. Because they might be better at it than us. That's the other thing too. When it comes to labor, we can be really specific.
Would it be a smart idea, as you said, if you don't have an employee, what I've been doing is I assume that I want to pay I'm not gonna get employed for 15. It's 15.74 in Tacoma right now. So the way I look at it is, if I were to have an employee, this is how much it is per day. So even though I'm not paying an employee, in my mind, at the end of the month, I'm like, okay, this is how much I made, this is rent, whatever,
Mhm.
whatever. This is how much an employee would cost, and I still try to put that away,
Mhm.
just in case. Like, I want to, in my mind, if I can still break even, it's a funny word, break even right now, and put that, what an employee would be away for 4 months, in my mind, like, okay, I'm getting somewhere. Also,
That's awesome.
is that, like,
Awesome. Yeah. And I'm gonna
and I
run that.
haven't made it there yet. It's always, I'll get 2 months, then 1 month it dips, and I'm like, okay, I wouldn't have been able to have an employee this month, but like,
Yeah, what I'm saying is not easy. I'm just telling you, but it starts just like that. It's 2 months. 2 steps forward, 1 step back. You know how that goes in business until you make it over. You can make it over though. I will say it's not always steps backwards. There are challenges and things to overcome. But when it comes to having an employee and setting that number, I remember David and I had the car wash in Daytona Beach, Florida, and we hired Kurt as our manager. I don't know if you remember. I had to decide that I ain't washing no more cars. We argued. David's a sweat equity guy. He willing to do it. He wants you right there. I'm like, I'm a business owner, man. I'm trying to. I'll bring more cars to the business to replace myself. So we had to determine what that number was. That if I wasn't out there washing cars, trying to make $100 a day, all right, how do I bring in $100 worth of cars for somebody else to wash and the business can keep going? Does that make sense? So that became my job. I began to drive cars from the teachers all the way down during the day, and I began to do networking in the offices versus, man, I'm sorry, the guy we hired loved it. It was free, he got paid, he was the man, he got to boss people around. I didn't want to be out there. I did music with some guy, he had a little record label, and they like to go to the studio all night. I ain't going to studio. Like, text me the song when you're done. Because I'm a business owner. That's my passion. That's why I'm doing finance, right? But you have to find those spots where it's not valuable for me to spend my time in that space. And how can I create additional revenue so that I can be available to get more and even hire more people? So that's really what labor comes down to. Is a couple ways to think about it. Margins are the sum of the cost of goods sold. I'm sorry, the sum of cost of goods sold and labor will equal your total production cost. You have to know what your most profitable items are. We talked about this already. That's why I'm stopping at that. By knowing what your most profitable, you gotta know what your Coca-Cola is. Pricing is based on the higher of the minimum. This is big. ROI or the market. The minimum ROI is the production cost plus your minimum markup. All right, let's talk through that one. How do I set a price?
Labor,
how much your supplies cost. For me, I'm an esthetician, so I have my services down to where I know for a full Brazilian, it takes 16 wax sticks. I know that if those sticks are labeled wax sticks, it costs me $20 for 500. If I do tongue depressors, like the doctor's office use, I know I can get 1,000. So I don't really have to raise my prices if I can minimize my costs. That way.
Awesome.
That's what I do.
What is your markup for yourself at that point?
Well, I guess it's increased, even though my price doesn't. I make more because I save more.
We just talking price.
Oh,
We talking about
you want a
expenses.
number?
What is your price? Here's why. Great example. Knows her numbers, knows the return on investment. But I want to give you boundaries. Boundaries are important. My minimum is what it costs me to put this thing on the table. I can't take anything less than that. Do you know that number in your business? Okay, and then the market oftentimes determines your price. That's where it's at. Because if you are in Tacoma, that's where you are, right?
Yeah.
And the value of your service is one thing, but in one city over, pretty close, give me one knock around here.
Yeah.
Seattle is another value. You shouldn't charge the same price in both places.
I do value.
If you try to buy a house in two different places, you're gonna pay market value. You are a business, know your worth, determine it. The minimum is the minimum, but then you need to find out what the market is and where you want to be.
I do value-based pricing.
Value is awesome. That makes your client, I'm not saying overcharge. Make sure that no fluff, so don't take advantage of people. But know your market is that under because they're different. You know, it's much higher to live in California than it is in Florida. Let me just say, it's a scary thing to even think about. Like you got to be on 10x business level in my mind to take what I'm doing when I look at California.
So I do markets mostly. So if I was to do a market in Tacoma, then I go to Seattle, raise my prices.
You do?
Huh?
You're saying you do, or are you asking you?
No, yeah, like sometimes I go in Seattle sometimes, but I just leave it the same price. So I could raise my prices.
I'm not sure if the market dictates that. You'll hear that in business talk.
The taxes will raise your
The
prices
taxes.
too. Yeah, so you have to change your taxes, but I do it based on fares. So my price is the same. I'm kind of like Starbucks. If I do a Starbucks is the same price. It's a very valuable product. So you pay a lot more for coffee. So that's how I do my gelato, because it's a very valuable product. But I change my prices definitely if I'm at a fair, because fairs are extreme. So my $5 ice cream or gelato is now $8 at a fair, at a county fair. That's just the way it is.
Questions around that? Hopefully that creates thoughts and questions. It's intriguing. Yeah, all kind of want to.
So I do a service. Of course, I have product materials and things like that. But a lot of what I do is my pricing is a service based. So is it about finding out what my competition is doing? Is that more how I can range my price so that I'm in the right range?
Competition, then also too, pricing allows you to set your own schedule. Lower prices, more frequency, higher prices, more exclusivity. So think about where you want to fit in that range as well. And your competitors are doing the same thing. It's like, I don't want those plants, I want those, vice versa. McDonald's is not going after Red Robin's clients. Red Robin's gourmet burger, you pay a whole bunch of money for. McDonald's is just making, they're in volume business. And so you have to determine where your business is. Somebody else had a question right there.
Yeah, so the product cost, you got your cost and your labor. So is your minimum market then
mark up all those expenses that you don't capture in those other two, or how do you get that minimum markup?
So the minimum markup is what you pay yourself. If you're, actually, I would include myself in the labor and in the business side of it. Does that make sense? So the minimum markup is what you're gonna take home for the business,
And then-
above and beyond whatever it costs.
So your other expenses like marketing or QuickBooks and things.
I put all of that in the production fund.
Okay.
Yeah, all of that's in my minimum. If it costs me, because if you're running an ad and you're an ad-based business, right, then that's your cost. You wouldn't remove that from the value of the service. I'll just pass it along. I add a little bit for me based on that. Yeah. For realtors, mortgage brokers, people in that business, their numbers are pretty much preset when it comes to percentages and what they can earn based on commissions, right? And in some of our cases, we get to set that number. That's the exciting part. So maximizing tickets, I'll go through these really quick. Finding partners that provide products and services that complement your products and services. I gave a great example of that just came to me because they got me. That's why I said it. But when you do TurboTax, file your taxes, you get a Credit Karma account for free. They are maximizing tickets. They know Credit Karma paid TurboTax to be a partner because they know, hey, you're gonna funnel 10 million taxes through here. And if I'm a reputable company, I align with your business, let's synergize. Does that make sense? Now, what does Credit Karma sell? Loans and credit cards, because they got credit information. So on both sides of the business, completely unrelated. One's filing taxes, the other one's in the finance business. Believe it or not, but they're working together. You can find partners like that. Maximizing customer value, that's finding the 20%. I'll leave it that simple. 20% of your client base is being ignored, y'all. Your best clients are typically ignored. We go after the 80%, hoping they come in, and that consistent 20% is who we need to love on, grow, maximize, and give them easier ways to do business and get in the door. So in order to do that really well, we have to find them. Who are they in your business? Those top repeat clients. And it's just, I'm saying this because it's human nature, right? Like the more consistent something is, the less we are attuned, the more numb we become to it. But in business, we got to be very intentional about where we aim and how we shoot our targets. And that's one of the ways to do so. We talked about these financial statements. I'm just going to list those. Again, those definitions are there. If I'm overwhelming you right now, remember QuickBooks? All right. And that's where we'll pause for a second.
Stand up from the QuickBooks team.
Actually, I want to stop and do a quick couple logistics before we do that. Everyone, did you get your QuickBooks email? All right, those two that didn't, we're gonna start to work on it. So if you want to go ahead and log in for me, please, and create your account. Create your account. I'll be back in about 120 seconds. All right, 120 seconds. Your account's gonna be, the login is gonna be the email that you originally received from QuickBooks. For those of you who already have QuickBooks, you're gonna invoice Kaitita, and we're gonna send you a credit for the entire year. I believe it's $176. So if you already have it, we're just gonna credit you up front for the whole year so you can keep going. So for the newer folks, you're signing up, your subscription's already paid. Take advantage, man. All right, so.
So I don't have a password, so am I recovering myself? I just wasn't sure. I was like.
I had a feeling I did it. No, that's why we're just picking up on. How are you?
Well, we can just do it, in two weeks, we can go over you. Okay. And then, but I.
That's what turn around and live like. It's you. Ah, don't.
Yeah, there's just certain.
Hey.
Those three stages are killing me. Okay.
Listen, I blew past the food.
I'm sorry.
I blew past the stage. I didn't even go through that. Hey, everybody. So, if I think recover, did recover work?
It did, but it's not. So are we going into QuickBooks now?
If you don't mind. If you don't mind.
I'm gonna see if I can.
I don't, I'm like, I get into the weeds, so I don't know what to do.
If you are, and you're familiar, you don't necessarily need to log in. If it's new again, you log in. Send us an invoice. Tell us the thing. All right, if you hit recover your account, it will bring up that email, it will send you a code, and you will be logged in. We got 2 more minutes.
Oh, wait. Uh-oh. It's just QuickBooks Online. Okay. I just shared it with you, Jasmine.
Oh, I'll just say, I'll get ready to share.
Ask me to share it.
Be like, let me text or let me call. Yeah.
Your number gotta be in the contacts.
Oh my God, this is so
I cannot play the game with you, man. Please. You for real. Please. Please. See, now you need to start not speaking here.
I'll do it for the two.
No, I wouldn't. My daughter
Yeah. Like, I mean, yeah. Right, yeah. Well,
All right, we ready to go? Got some chatter going? What's going on? Sorry, man. All right. Hey, I'm gonna play a video, quick video. This is a video that I downloaded from the QuickBooks website. This is a place that you can go beyond where we are today in your initial setup to find out how to do just about everything you want. This is gonna talk about adding your logo, you're updating your address, getting your EIN built in the QuickBooks, okay? And so I just want to show you quickly, and then I'll take any specific questions. I also want you to know that during our 1 hour session, we're gonna do at least one QuickBooks walkthrough. I'm gonna log into my QuickBooks with a group and walk through everything, including sending invoices. That's next Tuesday and Thursday, 9 and 12. 4 different workshops. We will do QuickBooks during that time, right? Today, we at least want to be set up at 100% level. So let's work through that, getting the login, getting the password, and then I want to help you know what's available. And there are also some additional resources on the Katita website too.
This is Jenna from the QuickBooks team. Company settings is where you enter basic info about your business, like your contact and tax information. This info is used when you communicate with customers and vendors from QuickBooks. Let's go over how to add your logo and record things like your business address and phone number so they'll be included in communications. To get started, go to Settings and select Account Settings. These are your company settings. Let's start with your logo. Select this box to upload your company's logo. After you upload it, QuickBooks automatically adds it to invoices for whenever you email or print something for your customers, like statements. This is also where you can change your company name, which shows up on printed or emailed sales forms and purchase orders. If your legal name, which appears on tax forms, is different, check this box and enter it as well. This way, your customers can see one name, but your legal information is still captured on official documents in QuickBooks. The last part of this section lets you enter your federal employer identification number or social security number. In the company type section, choose the tax form you use when filing your yearly taxes. And you can also record what industry your business is in. Entering your contact information helps get customers in touch with you. If your company email ever changes, just change it in this field. When you send something to your customers, it will usually include your company email. But if you have a different email you'd like customers to contact you at, uncheck this box and enter it in the customer-facing email field. If you enter your company's phone number and website, you can also include them whenever you communicate with customers or vendors. Your company address is important because QuickBooks uses it to calculate taxes, like the sales tax you charge customers and state payroll taxes. It's also usually included whenever you send a sales form or purchase order. If you want customers to send payments or write back to you at a different address, though, uncheck this checkbox and enter your customer-facing address. You can also have a different address that's used whenever you file your taxes. Now you're ready to set up your own company settings in QuickBooks.
All right. And I also included that in the inside of the I included that inside of the PowerPoint, so you'll get a chance to watch the video, including the video I'm about to show. In the next 7 minutes or so, 10 minutes, we're closing out, lunch is coming. I want to share with you kind of my perspective on business. One thing I didn't share, any Star Trek fans in the room? Always Star Trek. Janeway fan? Any Janeway fan? I had a Janeway yesterday. All right, Janeway. All right, she did. All right, so Janeway is a female captain. But her security officer is a Vulcan like Spock was, if you go back that far, right? His name is Tuvok. I want you to remember Tuvok, because a lot of what we talked about today are representatives of what I learned from Tuvok. Not Tupac. I learned a lot from Tupac, but that's a different story, right? Tuvok is a security officer, and he has this maneuver he does. Basically, as a security officer, he gets these threats, he hits you with these two fingers, and you collapse. You literally faint. There's no struggle, there's no fight. He can just hit the button, and it unravels, or it's released, whatever it might be. You have to find the toolbox in your business. All right. One of the things that I'm going to point out, or you're going to see in this video, is being a business owner versus being an employee, self-employed, or an investor. We're going to talk about the cash flow quadrant if you haven't heard about that before. Robert Kiyosaki, I got a video. Is the target of your business. Going back to what we talked about earlier, even if you have no desire to franchise, you need to create a system, a picture so clear, a vision so passionate that someone else can do your business just like you without you being there. All right? That's the concept. All right? Doctors are some of the highest earning individuals, self-employed individuals in America, but they're still limited to the amount of hours that they can work, even though they're paid the highest per hour. They don't have a business that can go beyond their physical limitations. All right? I saw that in Marvel. I always tell jokes around this stuff to make points. Doctor Strange loses the use of his hands, and it's over. All right? You can't lose your hands without a plan. He had a plan. He was arrogant. That was always going to work for him. Right? I'm like, you're going to die one day. You're going to get old. Your eyesight going to go bad. What's your plan? No, he was just going to be a surgeon forever, right? And find the fountain of youth. He lost the use of his hands, and he completely had to recover. You guys have an opportunity now. Think about that. What if? All right? What is that legacy? Significance, some of those keywords. And then check this video out. One of my favorites, it's on the cash flow quadrant. And then when we come back, I'm going to walk you through a 6-step business needs analysis. How to determine what I need right now in my business and what I should be looking ahead to as a blueprint for when I leave. All right. And then I got a request for you guys.
Psychology. They would discover the cash flow quadrant from Robert Kiyosaki. Robert Kiyosaki is mainly known for his best-selling book, Rich Dad Poor Dad, and the cash flow quadrant continues where Rich Dad Poor Dad stopped. But what is the cash flow quadrant? Basically, we have 4 quadrants, the E, the S, the B, and finally, the I quadrant. E stands for employee. As Robert says, people that have a job. On the bottom left, we have the S for self-employed or the small business owner. The self-employed is not having a job. He is the job. On the top right, we have the big business of around 500 people. The business owner is not having a job. Neither is he the job himself. The business owner has or owns a system. Lastly, at the bottom right, we have the investor. The investor lets money work for him. Each of these categories has advantages, but also disadvantages. And our society needs all of them. We can become rich in all 4 quadrants, and we can also become poor in all 4 quadrants. But it's easier to become rich when you're working on the right side. In addition, each of these quadrants comes with an entirely different mindset and varying priorities. The employee, for example, values job security and professional benefits like health insurance. He gets a paycheck every month, and this security is more important to him than being financially free. Freelancers and self-employed people, on the other hand, value their personal freedom. They hate working for a boss. They crave to be their own boss. Independence has the highest priority. Business owners ask themselves, who can I pay to do the job for me? Outsourcing and creating financial freedom is up on their priority list. Finally, the investor, he already owns a substantial amount of money and asks himself, where can I put my money in order to benefit the most? Money makes more money is his philosophy. We can split the quadrants in the middle. On the left side, we mainly have hourly wages. People work and get paid for it. If there are no working hours, then there's no money. The employee might be covered by his contract, but if the self-employed person becomes sick, then there is no income stream. Furthermore, the left side is based on the industrial age. Getting a college degree and a secure job was sound advice back then. The problem is, we're not living in the industrial age anymore. Times have changed, yet for some weird reason, the advice remained the same. Many professions on the left side are slowly but surely dying. They get replaced through technology or outsourced to another country. Eventually, people have to go through education again and find another profession. So why not use this opportunity to educate yourself on the right side instead of remaining on the left side? Business owners and investors create passive income. The business owner lets his system work, and the investor lets his money work. If they leave for a week, they still make money, and more often than not, the income actually increases. A strong business is a working system. Therefore, it grows without special attention. The employees ensure quality and growth. We already said that each quadrant requires different mindsets and also different skills. The self-employed person is often a perfectionist, doing everything himself, while the business owner needs the ability to lead his employees and the skill of closing deals. If we now intend to move quadrants because another quadrant seems so much better, then we need to not only learn the required skills, we also need to develop a completely new money-making mentality. Depending on how long we've been in a quadrant, this can be incredibly hard. Kiyosaki describes it as being addicted to a mindset. A smoke addict needs not only internal motivation, but also immense support from outside or a wake-up call from the doctor. He needs to change his mindset. Otherwise, he's stuck with a bad habit. Escaping his smoking habit becomes substantially harder the longer he has it, and the longer he remains within a circle of smoking friends. A change of mindset is crucial and can't be stressed enough. When we stick to the philosophy of an hourly wage, we are in no way moving towards financial freedom or the right side of the quadrants. The right side uses money to make more money instead of using time to make money. Those are two opposing worldviews. Without realizing this, we will be stuck in one quadrant. Often, people try to act like rich people. They try to act like a muscular athlete. They try to act like they are living in a healthy relationship. But action is not everything. Neglecting the mindset is not getting you anywhere. If you want to lose weight and become healthy, then following a strict diet and exercise plan might work for a couple of weeks at best. But eventually, you'll fall back into your old nasty habits because you forgot to adapt the right mindset. Kiyosaki is not suggesting radical, sudden changes. Instead, he recommends changing your mindset, remaining in your current quadrant, and slowly but surely educating yourself on the other quadrants. Being in one quadrant is like standing on one leg your entire life. Job security might seem like a great thing, but a look from outside reveals how risky it is to remain in one quadrant. Instead of standing on one leg, focus on two quadrants and make sure that one of these quadrants is on the right side, because the right side is making the real money. Also, he recommends moving to the business quadrant before going to the investing quadrant. While being in the business quadrant, we develop our leading skills. We begin to recognize good opportunities. Exactly, this ability is essential for moving to the investor quadrant. You will be able to distinguish between an excellent and a mediocre business. You will discover the differences between the leaders, and therefore you will make better investments. Investments bring us directly to the next point. Do you think investing is risky? Maybe consider the following change. An investment is not risky. Investing in real estate can be good, but the very same thing can be terrible. The difference is an investor. Either he's educated or he's not. Being and remaining uneducated is risky. Giving your money to someone else can be risky. Trusting your banker can be risky. We have to educate ourselves in order to recognize whether an opportunity is exceptional or horrible. Education is essential in making investments, but also in growing a business, and we need to constantly improve our education. This leads us to the next point. Always trust in facts and numbers, never in opinions. Stocks are risky. Stocks are not risky. Real estate is a safe bet. The price of this house will go up in the future. Getting a degree is the best way to ensure job security and a constant income. A degree is worthless. You know what all these statements have in common? They are opinions, not facts. Before spending or even measuring, using our money to make more money, we have to educate ourselves, learn the facts, and understand the numbers. We frequently act irrational, we act emotional, but we think that our actions are as logical as it gets. This is simply wrong. If we are not educated just yet, then our decisions are based on opinions and emotions, not on facts and numbers. So far, we've discovered the 4 quadrants that we've learned that moving from one to another does not only require a new set of skills, it also requires a new mindset. Furthermore, we realize there are no risky investments. The only risky thing is being uneducated. Therefore, we need to work on our financial education so we recognize the difference between good and bad deals.
Period. All right, so that's like a super mindset education on where I should be in that space. Hopefully you step back and begin to look at yourself, where am I in a quadrant, and what should I be aiming for? And then there's some books and some different things associated with that. 95% of the wealth is in one quadrant, y'all. Just know that. So 95% of the population.
What's the difference between P and S again?
You own the job, meaning you do it, doctor, all right? You own a system, Chick-fil-A, it only costs $5,000 to buy Chick-fil-A, by the way. It does. You just gotta split the profit 50-50. That's their deal. It's not $1 million like McDonald's and you give them 1% over the rest of your life. They provide a low entry partnership. It's called owner operator. Kind of cool thing about it. All right, really quick business analysis. Cash flow. All right, earning additional income. How am I doing in managing expenses? This is how I judge my business. An emergency fund. Do I have an emergency fund? 3 to 6 months of income put away in my business. Am I prepared for unexpected expenses? These are questions. All right, how do I look at debt? Am I consolidating and striving to eliminate it? That's the mindset around that. It's not just out there floating and I'm borrowing more and more and more without a plan. All right. So what's my goal? I'm striving for that. Remember, you're gonna give this away someday. All right. And my papa was a Rolling Stone wherever he laid his hat was his home. And when he died, all he left us. You can finish that one.
Was alone.
Don't do that. Don't do that. All right, so, all right, my father's still alive and he just made me beneficiary on some different things. So I'm not saying that, but that's the song, right? We not leaving debt behind. We don't plan to at least, okay? And a part of that is proper protection. I'm gonna protect against the loss of income if I have partners, for myself or otherwise, but also I'm gonna protect my business assets. I'm gonna have insurance, liability, all of those things so that I'm not exposed and somebody could come and snatch my legacy because a slip and fall happened or anything like that. I'm going to be protected. All right. I'm going to always focus on building wealth. Are you saving? Are you growing, outpacing inflation, reducing taxes? Am I in a situation where I need professional money management? It's out of control. I got too much happening. I don't even know. I got $500,000 in the bank and it's not invested. You need professional money management, whether you know it or not. That's too much money to have while they lend it out for you. Because that's what they're doing. They're making money. A bank is a business. You sign a paper that says for every dollar you give us, we get to lend it out 10 times. That's the bank's business model. So they're going to take $10 and make car loans out of it. All right? And then the car loans pay back your money. That's the bank's business. I don't want to be in the business of banking. I want to be in the business of building wealth. All right? I use the bank for what it is, only for transactions. That's what the bank's for. They hold my money temporarily, short term. Everything else has a place to go. And then last but not least, am I preserving my wealth? Am I preserving my wealth? Do I have proper tax planning in place for the transition that's coming? The average tax rate in America, you guys know what it is? So after you make the $10,000 we talked about earlier, 25% of that goes to Uncle Sam. That's the check you write. As you make more money, it goes up. It goes to 30, 35, and the death tax is around 50% if I don't plan. So everything I built all my life without a proper plan of trust and some kind of transition in the right beneficiaries, let's say you did do well and you left it off, 50% of that is gonna go to somebody that's not in your family or not intended. And we need a plan for that, because what I'm doing is building a legacy. I started, and everybody started here. This is why it starts first, to have additional income. Why we got in the business more than likely. But at the end of the day, this is what I'm leaving behind. And you need to be on that scale. So mindset checks, a few of the actual things I may need to fill in as far as filling in the gaps, and then I can move forward. So that's what I would look at in any business. I don't have time for questions because we did a lot of that today, and it's lunchtime. I want to get you to lunch. But there's a link right there for your free coaching session with Kingdom Financial Solutions. I'll do as many of those as I possibly can. Because I got a system.
Are we gonna get an email with that? Cause I can't read that.
You will get the entire PowerPoint, and they're gonna give you some specific instructions on how to do it. Absolutely.
Yeah, okay.
All right, and then there's a survey that's coming, but actually they put it in there. Did you take my contact out? So if y'all wanted to reach me directly, that's my contact information. And here's how you can help me. I'm looking for coaches. I have a system. I train coaches so they can help more people. It's not just me helping people. Does that make sense? And so I'm looking for people to train. I'm not necessarily looking for coaching clients. I will take coaching clients into my business. That's my business. But my ask, very specifically, my target market, how I maximize my toolbox, is I need more coaches, especially in the Washington State, Tacoma, Seattle area, as we do DSAP across the board. I want to make sure I got a chance to follow up, especially have people in person. So if that's you, or if you know somebody that is interested in this crazy stuff that I just talked about, right? Because this is not for everybody. Just have them contact me. There's more information on our website as well. And then I'm going to leave the survey up and hand it back over to Ms. Farah.
That was